Hello, my name is Alex Piroglu, and this is the My Setups video I'll be showing you which markets I'm trading and why, using my rules-based trading roadmap. This is my setups for week 23, 2025. Apologies if I'm sounding a bit funny, but I managed to get a cold now in June. But this is the British summer for you. Okay, so let's begin. Uh, my favorite slide is obviously the risk warning. There is a high degree of risk involved in trading. Past results are not indicative of future returns. Smart trade systems and all individuals affiliated, that is me, assume no responsibilities for your trading and investment results. And I do not give any kind of guarantees regarding during my webinars, except one, that you will have losses in trading. And with that out of the way, let's start. This is how my presentations usually end. So what I will be doing in order to make sure I have your attention is offer for some free bonuses for those that manage to stay awake up until the end. Right, so the bonus I'll be giving is I'll be giving a free membership to see my courses for a community I'm preparing. So the Smart Trader Systems basically is a trader development program to take you through the 5 stages of trader development, which form the acronym SMART. And it's comprised of courses, uh, coaching, community, and closed code indicators, which I'll be showing you right now. Now, so if you want to be part of the community and the offer I'm doing, the founding member offer, send me an email at alex@alexpiroglu.com. That's all you have to do. Basically, email me and then manage to stay away up until the end of the presentation. So, with that out of the way, a bit of an introduction, talk to you about my approach. Now, some of you may have seen my webinars before, so this part may be the same, a bit repetitive. Feel free to fast forward to the next 2 or 3 minutes. But for those that will be watching for the first time, I think it's important to do this. So my approach basically has 3 pillars. It's based on 3 foundations. The first one is that macros matter. So this is an idealized chart of a market. It doesn't really matter. It can be equity index, bonds, commodities, FX, and the red line is basically the valuation. It can be any kind of metric. Basically, it's basically supposed to represent macros, and it goes to show you that uh, prices follow the macros. And this is their fundamental value, and this is price. Price basically we can see through technical analysis. So, but and the second pillar of what I do is that there are multiple time frames. Basically, there are 3 time frames: um, primary trend, short term and intermediate. The primary trend I see on the monthly chart, the intermediate term on the weekly chart, and the short term trend on the daily chart. So this is another pillar that I have my philosophy. I don't do any intraday trading. If you're looking for intraday trading recommendations, you're in the wrong place. And not only we have multiple time frames, we also have multiple factors. And what do I mean by that? It's time frame has its own return drivers, hence multiple time frames, multiple factors, MTMF. And that basically means that I check the business cycle or economic statistics on the monthly chart. Then I look at commitment of a Fed report, sentiment in intermarkets on the weekly chart, and then I do my technical analysis on the daily chart. Because I think each time frame has its own, as I mentioned before, its own return drivers, and because macros matter, I look at the big picture and then go into the technicals to align myself technically with what the macros imply. And the third pillar is everything has to be rules based. It doesn't have to be fully systematic, but you have to be rules based. Um, you can use systems as the or indicators as decision support systems, but there has to be a checklist kind of way, a framework for you to be seeing the markets. Uh, All right, so these are the markets I follow. Basically, I look at equity indices, either futures or ETFs, rest of the world, basically US, EU, UK futures, and then the rest of the world via ETFs. Bonds, again, futures, and then also look at ETFs. And for futures, I do for short-term trading, ETFs for more position trading. FX, um, European major um, major currencies, commodity dollars, and various others. And then I look at commodities, precious metals, industrial. I've got energy, grains, soy, softs, food and fiber, and then livestock. And then finally a little bit of crypto. So basically, the way I have my investment universe, it's in 11 sectors, and I've decided to have it in these sectors because there are different fundamentals, especially commodities. People refer to as commodities, but there are very, very different drivers for metals, industrials, for grains, soy, and so on and so forth. So how do I filter them? Because my investment universe can be more than 50, 60 markets. Um, so how do I filter them? How do I choose? Because even if you classify them within these 11 sectors, how do I filter them? So this is the what I call the roadmap to rules-based trading. And what I do is, as I mentioned, during the MTMF part of the presentation, I look at the macros, which is basically the why markets should move, because I believe that markets go from point A to point B from our macros. This is the based on the monthly and the weekly chart. Then I look at markets themselves, technical analysis, because technical analysis is supposed to answer the when on the daily chart. So macros for the why should market go from point A to point B. This is the first chart we saw, which depicted, macros matter. Then the when, and finally we have a model, a system, basically to, tell us how to take these views into some type of action, how to enter a trade, how to position size it, and when to exit. So these are basically macro technicals and strategy. So the macros, I take it through a four-stage funnel um, on the various factors I look at. Then I classify markets on the market map model. So I try to combine uh, macros and technicals. Again, this is at a very high level what I'm showing you here, which means I'm trying to see the combination of macros. If I'm bullish on a market, try to see if the trend is also bullish or bearish, because you can have a bullish macro because they're a bit forward looking, more like forecasting, if you will. But you need technical analysis, which is more like for nowcasting. So I try to see when they go bullish fundamentals and bullish trend. That's the best of two worlds. Or you can have bearish fundamentals and bearish um, trend as well. But things don't always work out that way. So it can be other combinations. You can, take positions, either not take position or adjust your position size. And then finally, take this in the portfolio with a core and satellite approach. Core being long-term positions in ETFs, and the satellite being short-term futures trading. Again, this is at a very high level, so um, let's look at the factors I'm looking at. So for macros, first I look, as I mentioned, the intermarket cycle, intermarkets and on the weekly chart, and statistics or economic statistics, economic figures on the monthly chart. Then I go into the weekly for the commitment of traders report. Then I look at for sentiment, smart sentiment index, and various other sentiment indices. And I think it's very important because sentiment is inversely related to liquidity. And then I look at seasonals. So after I formulate a bullish or bearish opinion on this, which I will show you examples and the setups I'm looking at right now, then I go to the daily chart and see how the market is actually is. Because if a market, for example, has bullish fundamentals, but it's in a bearish trend, obviously you want to be waiting for the trend to confirm, to go from bearish to bullish. So I look at the market map, an 8-stage trend model, which we'll briefly explain today. Relative ranker, how to rank the markets, MACTV model, This is that was the awarded indicator, momentum indicator use, and then the volatility valuation index. Now, each of these is going to be a module in my course. Of course, the strategy as well. So there's plenty of opportunity to learn more about this. I'm just giving it the context before the content, if you will. And the strategy, I create strategy using the 4S framework: setup, signal, stop, and size. So this is the roadmap to rules-based trading. Okay, so let's uh, look at some examples. My setups for this week. We'll be briefly at the high level cover the trend market map today. Again, this is going to be a module in the course. All you have to do is like email me, and this will be very briefly. We'll just look at the market map just for a few minutes. Right. Basically, it's the market map is like a trend life cycle model, and so if you divide trends into bullish and bearish, I've always thought that there is a bit more than that. I wasn't satisfied with this binary classification of markets bullish and bearish. Again, a very popular, and of course, it's useful way of classifying market trends is with moving averages. A very popular one is the say 200 bar moving average, and if it's above, it's a bullish market. If it's below, it's a bearish. But I wasn't too very happy with this binary classification because if a market can be above the 200 moving average and falling, and can be below the moving average in a bearish trend and then rising. So I needed to incorporate somehow this information in the market itself, the market model. So I classified the market not just rising and falling, but going with the trend or having a counter trend move, and then having a short or a long-term counter trend move. So the first part of this eight-stage model, you have an emerging bull market. I mean, the market has just changed trend. Then we have an established bull market. Then you have a bit of a dip, a bull market pullback, and then finally bull market correction. So as you can see, we can be in a bull market, but there are four stages to it, not just simple as bullish or bearish. Likewise, it's for the same thing for the downside can be a emerging bull market, established bull market, bounce and rally. That is a bear market bounce and bear market rally. So again, this is at a very high level, very briefly. This is something we'll be teaching at the course at more in detail. But I'm showing you this to give you a bit of an understanding of where I'm coming from and how I see trends and technicals, um, so you can understand better the rest of the presentation. So let's start with bonds. Again, this is a chart of treasury bond futures. Top chart is as you can see, is the treasury bonds. This is the weekly chart. Middle pane is the commercials, COT data. The third one is the SMART sentiment index. And the last one is another sentiment index, which is part of the composite sentiment index. But I'm just not just looking at the composite index, but also I'm looking at the various um, component sentiment indicators as well. So this is the crowd sentiment index. Um, the arrows that I have on the top chart are based on the commitment of traders report, and you can see that you have obviously in red, sell arrows, and in green buy arrows, but they can see also that they differ in size. Now, the larger ones are major signals. These are more valid and should be taken more seriously. And then you've got minor alert signals, minor alerts, because and you expect this to be very short-lived. Not always, but most you should be short-lived. Now, there are a lot of rules how to use this. because if a short-lived um, a minor signal lasts a bit more, then there are implications, and likewise for the major signals. But these are again all part of the course. So what we have here, and as long as the signals remain valid, in conjunction with the smart sentiment index, you have the bars color coded as green or red. And that means that these are setups, these are not signals. As I mentioned, the setups are on the weekly chart, and what I do is after I've got a green or a red color coded week, then I go to the daily chart to take my signals. So although I hate using this word, it's more of an alert rather than a signal. But sometimes it's a slip of the tongue, if you will. But um, so please excuse me if I use the word signal. Actually, it's an alert. So this is how it works. As you can see, we have a minor alert for treasury bond futures. Um, let's look at that's the one I'm talking about. So basically on commitment of treasury report model, we have deconstructed the data. Now let's switch our attention to the 10-year note futures. Again, minor and major signals, alerts. Second panel, again, commitment of traders report, the commercials. Then we've got the smart sentiment index and then the crowd sentiment index. So what we see here again, uh, the smart sentiment index, the composite, is above the zero line, indicating optimism. The smart sentiment index has got four um, stages. It's above the zero and rising, above the zero and falling, below the zero and falling. Now I'm going to be changing the color coding so it can be a bit more obvious. So, but for now, it shows that the sentiment has moved from relief, which is basically right, it's the level of the indicator below zero and rising, to optimism, which is above zero and rising. So that shows that there is good sentiment in the market. This is for 5-year note futures. Again, we have a minor buy alert based on commercials. And although I'm very bit skeptical of buying against the trend, but for now, shorts should be a bit careful. As you can see, the major alerts, the sell alerts, have worked very well for bonds, and the minor ones have been short-lived. So, some caution is warranted for bond bulls for the short term. Mind you, this is a weekly chart. I'm sorry. Again, this is a weekly chart. So once you've got this, then you turn uh, on the on the daily chart to get your signals. And the only thing that is a bit worrying here is that the crowd sentiment index is a bit overbought. That's one of the components. Again, now switching to the daily chart, this is bond futures. The second panel is the market map model that we explained previously, these 8 stages. So bonds are currently on the sixth stage, which is the most bearish one. Um, this is the volatility valuation index, and I've spoken about this in the past. Volatility valuation index is an indicator I got inspired from John Bollinger. It's not Bollinger Bands or anything like that, but it works extremely well. Again, high volatility, the market bottomed out. Now, what I'm checking out is the MACTV. This is the awarded indicator I'm using for momentum. It's just one tool that from the many that I'm using. Is at the below 50 level, the rundown level. So indicating that there may be chances for a good rally. So bond bears, the trend is in stage 6, which is the most bearish one. But there are subtle indications that the trend may be reversing, although it's completely against the trend. But if someone going to be taking this trade, they should be doing so with very small size. And also in the middle, in the third panel is seasonality, and you can see there's good seasonality onwards from June till August. Again, 10-year note futures, as we mentioned. Now this is again turning, and this now going from the weekly to the daily chart. This is the daily chart. Treasury notes are on stage 5, and this is the signals are the smart signals. Basically, what I have is created a signal generating algos, which are enabled ad hoc when I have a bullish or bearish chart, sorry, setup on the weekly chart. And that means that whenever I have something that I'm interested in on the weekly chart, then I go to the daily and switch on the signals of the position that I'm trying to take. So for example, if I'm looking for if I have a bullish setup on the weekly chart, then I'll be switching on just the buy signals. That's why you hear here you have just buy signals. I've taken off the sell signals because I'm interested just to take long positions, very small ones. This is a chart of the bund. Better relative strength than treasury bonds. So if you want to be going long fixed income, perhaps you're going to be looking at the bund instead. Again, volatility valuation indicator got high. That was at the bottom, and the MACD was at the risk range below 150. Those that are familiar with the MACD will know that's the oversold level. So the two indicators, one was high and one was very low, and that's what I like about these indicators that are uncorrelated. So you're not using RSI, stochastics, and indicators that have basically tell the same thing. And then in the third panel, you can see seasonality for Bund is positive again. And currently, in the indicator, pointing that the Bunds are in a bit of a trading range because you can see it's grayed out. I've quantified the definition of a trading range, which is the MACD being between 50 and minus 50 for more than 20 trading bars. Again, these are the signals I have. Obviously, I wouldn't be taking all of these, and I will be waiting for the market to turn from, say, stage 6 to stage 7, and so on and so forth. There are more signal generating mechanisms you can apply. The point is what I'm trying to here is go from the weekly, have a setup there, then go to the daily. FX. Now, this is quite interesting. For FX, I had a minor sell alert for Euro FX futures. It worked quite well for 3 weeks. Sentiment was at the grid level. The crowd sentiment index again was also at the grid level. So there were three pieces of evidence saying that the euro could be having a correction. Uh, but now that was short-lived and the market is making a recovery. So Swiss franc as well, almost the same situation here. Minor sell alert right at the top. Again, sentiment index at the grid level. But this is the country when afterwards the indicator, one of the sentiment indicators gave me that there was too much fear in the market right at the bottom of the Swiss franc after it had its three um, 3 week decline. Now, um, would like to present right now is three minor alerts I had for various markets that did not work. Now, these are, as you can see, is our previous week's alerts, and the market completely ignored them, which shows that there is genuine strength or weakness, if you will, for the US dollar across all currencies. So the in the previous currencies we saw EURFX and Swiss franc uh, had recovered their losses. British pound minor COT alert and the market completely ignored it, although it was combined with good sentiment, greed, I mean accompanying sentiment. Now look at this. This is very interesting. Australian dollar. Now we have minor sell alerts. I'm very interested to see how this will play out. Switch on the daily chart. Canadian dollar, likewise. but the market completely ignored it. The signal, I mean. New Zealand dollar, again, major alerts, and the market worked off of them. It goes to show you that even the failures can be interpreted in a way that, even the failures have informational value, which means that if a major alert, I mean, major commercial selling hasn't been able to stop the market, it could be that there is a trend change coming up. And now with the Brazilian real, again, same thing, three um, major alerts, and it seems that the market hasn't, at least so far, been able to be pushed down. That's a sign of strength. Now, if you look at again on the Brazilian real futures, beginning of 24, after we've got these two signals, how the market responded and had a huge decline. Same thing in November, and you can see when it works, it was really well. But now I think I'm getting the impression that there is something bigger going on here. Could be wrong, time will tell. But for now, they all sing the same song. Again, you can see how the major alert worked here, major alert worked here, same thing here in Canadian dollars. I'm talking different markets. In New Zealand dollar, again, worked quite well. Again, worked quite well. Worked quite well. Let's switch to the daily chart for EURFX if someone wants to be playing the long side. Again, we had the signals, the smart signals. I will be making enhancing this version, making to classifying the, because what I've got here, these conservative signals, I will be giving more aggressive signals for these a bit more aggressive, and so there will be more signals for people who are really in a hurry to get into the market. Again, Japanese yen. This is the chart that I showed 3 weeks ago. We had a minor COT alert. And this is how it played out. Let's see before and after. Now we have a new, last week, a new um, minor COT alert. Um, so let's switch to the daily chart. So the minor COT alert, but now the trend is bullish. As you can see, momentum is bullish, kind of like in a trading range, but the trend is on stage number two, if you remember from the market map. So there is no sign of reversal. So again, to make sure we're on the same page, what I'm going to be doing is going to the weekly chart, get my alerts, and then go to the daily chart and wait for it to confirm. Macros matter, but and they provide the why, but the when is technicals. Let's switch to commodities. For energies, I don't see anything. To tell you the truth, I should be covering this. I just got this just for the sake of completeness, because some people may be, uh, have a high level of interest for commodities. So I don't have a bias for this. We saw that the COT alerts worked very well, the major ones that is. Now, as of today, we have a minor 3 weeks ago. On the weekly chart, the market is a bit oversold on the round down range of the MACD. Um, there is positive sentiment, so I wouldn't be surprised if we see some kind of a bounce on the energy markets, because I see the same type of pattern: contraction of volatility, minor buy alerts, momentum on the weekly chart is a bit stretched. Uh, but so far, I haven't seen anything too big. Now, of course, this could turn into something big, which will have the implications that we might be at a later stage examining things from a larger change in trend. But as of now, this is what I'm seeing, and I want to be going too far into the future, because the further I go into the future, the more blurred my vision becomes. Again, gasoline futures, again, no significant bias. The COT is very mixed. Again, light crude oil, again, same thing, very biased. Just the MACD, I think, is the most strong information I have here from the MACD on the weekly chart, and I see it again coming from the rundown range, which means there is kind of potential for it to produce some kind of a rally, but I don't have anything strong. Again, I mentioned I have this just for you to have a a view of, at least from my eyes, how I look at um, commodity markets and energy in particular. But I wouldn't be trading this, at least not now. I would like to see a bit more strength for this. And this is the daily chart. Again, color coded the light crude oil with the colors of the market map. It's in stage 7. It's basically having a small rebound. Then I see the MACD, which shows positive momentum on the rebounding range. And also we see that we have positive seasonality up until the 2nd of June. Now, since we have positive momentum and positive trend, someone in theory, if they were risk averse, sorry, they were a bit, sorry, the opposite actually, they have a bit of a higher tolerance for risk, they could be looking for long positions in this purely as a technical trade, because from a macro point of view, I don't see much. So this could be a trade grade D. For those that don't know how I grade my trades, please look at the previous video. So this could be a trade grade D. A is the best, B, C, D. So this is a purely speculative play. Again, what I would do, since I've got, short-term trend, bit of momentum, bit of seasonality, massively against the trend, take very small positions, open the smart signals, and then when it comes, take a very small position. Personally, I won't be doing it, but I'm not you. Again, stage 7, MACD positive, and also good seasonals up until the 2nd of July. Again, let's go into commodities, precious metals. Now, this is a difficult one. This is the gold chart I showed 3 weeks ago with the um, major city commercial alerts. Now, on the again, the top chart is gold, bottom is large traders, large specs, and commercials. The bottom one is the smart sentiment composite. And this is how it looks now. This was this 3 weeks ago on the previous video. This is an update. Again, we have this is difficult, yeah, for me, gold. This is a difficult chart, difficult market today. And I'll show you exactly what I mean. Uh, this is on the MACD on the weekly chart. It shows that it's very overbought. It's at the risk range. The previous time we had a bit of a sideways correction back in October, if you will, which was accompanied with a minor COT alert, and that was very convenient because you had both momentum, so you had two different factors confirming each other. You had momentum, which was at the risk range. You also had commitment of traders report. I'm talking about the October minor sell alert. And the market went sideways, basically had a correction in time, as they say, not in price, and then started rallying. The COT data model didn't signal, but smart sentiment did. So in theory, you had a filter to start looking um, for buys. Now the difficulty in the current situation is that we've got um, COT minor alerts, sorry, major alerts, but at an overbought level. Something that I haven't seen ever before. I went back through gold futures data more than 20, 30 years, and I've never seen this situation before. It's the first time. We've had the previous encounter of the market being uh, overbought, if you will, risk range, and minor sell signals, so the opposite. But I've never ever had this ever before, and I went through the data. It's the first time. And like they say never. We'll see how this plays out. Again, it could be a correction in time rather than in price, which means it may go sideways as it did in November. We'll see how it plays out. Um, this is silver. Now, this is the most talked about market in the past few days because it's making a new high. Again, the minor and major alerts. smart sentiment composite, and then the crowd sentiment index at the bottom. The smart sentiment index. There's no COT alert there, but we had the smart sentiment composite on the optimism phase, and also very low the crowd sentiment index. So there we had two pieces of information saying that silver futures were bullish. Now going into again silver futures. This is with the crowd sentiment index. This is the previous one. There you go. So this is how it worked very well before. Bottoms, bottoms, and tops. And now at this stage, I don't see anything that is at the level where previously had indicated some kind of a reversal, not from a sentiment point of view. Um, Now, the indicator we're seeing before is the gold-silver ratio. Um, I'm sorry about this. It wasn't a sentiment report because I was actually wondering why the chart goes upside down. This is the gold-silver ratio, and my apologies for this. It's not a sentiment, it's the gold-silver ratio. Now, but I've also making some massaging of the data. Basically goes to show you how much um, silver is valued versus um, gold because they're both precious metals. And as you can see at the top part, um, gold is valued too much versus silver. Again, um, at, so that forms bottoms in silver. So when the indicator is high, it forms bottoms in silver, and when it's low, it forms tops in silver because gold is too low um, versus silver. And so far it works really, really well. Again, we use it in conjunction with other tools, sentiment, commitment of traders report. Again, it's all done on the weekly chart. And so far we had the the buy, the indicator was in the buy zone. Again, this is an intermarket indicator. So, but it hasn't reached a level when should some caution may be exercised. So switching to the daily chart, again, this is silver futures with a market map model. So market is on stage two. Um, Momentum is positive, just came out of a trading range. So any pullbacks will be more than welcome. What you want to be doing, open the smart signals indicator and start taking your buy signals. Again, this is the MACD. When it was in the rundown range, it had a reversal from that and entered the rebounding range. Coming from that, you can see it produced very powerful rallies. And now it is at the rally range above 50. And this is how it looks like on the daily chart. We have a bit of a bearish sentiment, sorry, seasonality. So the indicator at the middle panel is season, seasonals, and at the bottom, of course, is the market map model. So we're in stage two, the most bullish model stage, and but we have a bit of bearish sentiment. Apologies for that, my brain is not functioning properly. We have a bit of a bearish seasonality. So up until the 24th of June. So we'll see how it plays out. I mean, it doesn't necessarily have to the market, listen to the um, indicator at the middle panel, but it could be that we see some kind of a pullback, and that will be opportunity for us to apply the smart signals indicator as we see already on the chart. Platinum futures. Now, this is really, really interesting. Again, we have the major and minor commitment of trade report signals. And at the bottom, again, weekly chart, at the bottom, we have the MACD indicator. And you can see that the market is in a MACD defined trading range. That means the MACD is between 50 and minus 50 for 20 bars. Since the 5th of June, that's when it qualified. Basically, the indicator came into the range between 50 minus 50 in I'm just checking the chart, beginning of 23, and it qualified on the June of 23, 20 bars, that is 20 weeks, and it's been like this since June of 23. It's the longest trading range I remember in the at least in the previous in the recent past for 12 months. And as you know, there is a saying, the higher the base, the bigger the base, the higher into space. I don't know who remembered this, who said this. I think I've heard this from Linda Rashke, if I'm not misquoting her. It's not my quote. Um, Maybe she heard it from someone else. I don't know. I think I've heard it from Linda Rashke. And in any case, I think that what's more important, A, it's not my quote, and B, that it is true that this trading range, um, when there's a breakout, there should be a big move for platinum futures, which we will be indicated hopefully by the commitment of traders report. Now, the previous last alert we had was a minor buy alert, which worked quite well, too well. Um, so let's be paying close attention to platinum futures. Um, this is the alert I'm talking about. Again, platinum futures, the weekly chart. The only thing that's a, slightly worrying is the crowd sentiment index, which is in the grid stage. The composite is not yet. So again, let's see how this works out. Palladium, again, same, very similar situations. We had minor sell alerts, but the MACD since the 22nd of July has been in a trading range, and since July of 2024, the market's gone sideways as quantified by the MACD. Again, it's been there a trading range for 11 months. So something is going. So while everyone is paying attention at gold and silver, platinum and palladium, I think we'll be hearing more about them in the not so distant future. Again, same thing. The the bigger the base, the higher into space. Commodities, then I'll switch to grains. The From a grain complex, I just had the corn futures. Again, you can see the massive bearish trend. We have a bit of a rebound. Um, the major sell alerts. Um, Sentiment index again in the um, in showing bearish sentiment. Again, with the last major bearish alert was we had also grid for the composite sentiment index and the crowd sentiment index. So you can see that there was a lot of things pointing at the same direction. Now we have another one. So let's see how will this play out. Corn futures. Let's switch to the daily chart. On the daily chart, we are on stage 4. Stage 4, if for those that are, it basically means that you're in an have a deep correction while you are in a uptrend. Stage 3 is a shallow correction while you're in an uptrend. So the MACD will be guiding this. It is on the um, again, this is the top we saw previously. MACD again above 150. Volatility valuation index again was at a high level. Again, high level in March. And the MACD now is very low. So I was expecting a bit of a bounce here before. Sorry, a bit of a bounce before things pick up to the downside. Industrials, copper. I don't see anything major here from a commitment of trader point of view. With a couple of buy alerts, which worked really well back in the beginning of 2025. Sentiment was high. Again, you can see what happens when sentiment is high or sentiment is low. Again, it worked really well. Now there is inconclusive evidence. I don't have anything major. So I mean, I don't see anything in extreme. You could, play this if you want from a purely technical point of view. But I don't see this as a macro play. sentiment might be coming into the optimism phase, more liquidity coming into the market. Again, you could be saying, if I was, someone put a gun to my head and say, play this on the, choose a side to play this, I would go for the long side. But likely no one has a gun to my head, so I don't have to. Again, this is the daily chart. Market is in stage one, emerging market, emerging bull market. Again, MACD was in a trading range. A lot of commodities in trading ranges. And then you can, again, when the previous bottom, bit of a recap. MACD was at the rundown range. Also had too much volatility, and then bam, produced the bottom. And now we're in a trading range and having a breakout. Again, if you want to be again playing on the long side, we had a buy signal actually today. The only thing I would say that's a bit bearish is seasonality. Again, markets don't have to follow season. For me, it's like a pleasant add-on. But if I choose between trend and seasonals, I would always choose the trend. But that said, I mean, you can see the seasonals up until August are not, the most bullish factor. Commodities, soy complex. Again, soy futures, we had a major sell signal, say alert, um, commitment of trader report, and I like this when we've got this in the downtrend. On the daily chart, the market's in a stage 7, which is having a bear market rally, bear market rebound, and we have bearish momentum. So if you want to be playing this on the short side, again, apologies for the cough. Um, you could either wait for the actual trend to change or base yourself on bearish momentum. So you're in a long-term downtrend, but in a short-term rebound. Retracement range, again, bearish momentum. And this is what I like about soybeans. Again, as we mentioned, this the technical picture isn't the best. It's having a bit of a rebound, so going sideways. So if the bearish COT alerts were to work again this time, that would be a best time because entering the 10th of June up until the 3rd of September, we have very bearish seasonals. So from that point of view, the timing couldn't be any better. Again, we can take speculative sell signals now that momentum is reversed also, or wait for the trend as well. So basically, whenever depending on our risk profile, we can start looking at sell signals. Softs. Again, looking at cotton, we had a major sell alert a few weeks ago. Um, that's the one. Switching to the daily chart. Uh, Again, the trend is in stage 6, emerging bear market. Um, the MACD is in a trading range. Market shows in a trading range. That's what I love about the ranging range of the MACD because you can quantify basically what you see on the chart and you can scan for it. Uh, this is basically when we had that sell alert. This is what showing what happens on the daily chart. Um, it's currently ranging. You're in stage 6, but again, um, cotton as well also has very bearish seasonals. So if this is going to start breaking away from its trading range, out of its trading range, follow the commercials and the downtrend. This is a good time to start doing this. So these markets should be closely followed. At least I will. Cryptos. Um, Bitcoin, and then Bitcoin with major and minor alerts for the bulls and the bears. Second panel is commercials and large traders, crowd sentiment index, and then the smart sentiment composite. Let's have a bit of review what happened so far. Again, grid level, we also had a commercial um, sell signal, sell alert. We also had then subsequently a major buy alert, a minor buy alert with the grid level at the sentiment. You see how beautiful it works with also the crowd sentiment index. Um, Again, we're trying to see this from various points of view, and when these line up, you have a better chance of the trade working for you. Again, there are no guarantees. The only guarantee is that you will have losses in trading. Again, a major buy signal with the sentiment in the composite and the composite at a uh, panic level. We had a repeat signal, and then with the minor one, crowd sentiment index was on the grid level. Whoops, and there you go, another grid level for the composite. So far it's worked really, really well. And as of today, there are no extremes, so the macros do not suggest either a reversal or continuation. So in these cases, what I do is give the trend the benefit of the doubt. So I will continue with the existing trend until the weight of the evidence, basically, if the trend reverses, I won't wait for the fundamentals, I will get out, you know, or perhaps look for extreme environments like using the volatility valuation index and the MACD. So for now, the Bitcoin futures have the benefit of the doubt because I don't see anything extreme. Again, market is in stage one, um, emerging bull market. The MACD is in the retracement range. We have a bit of bearish momentum. So trend is bullish, momentum is a bit bearish. So again, you can give it the benefit of the doubt and focus on the long side, if you will. Volatility valuation is very, very low. That's another thing to be watching out. So we could be waiting for a pickup in volatility. When volatility was at a high level. Now we see this is uh, uh, the bottom panel is seasonality. Again, we've entered the bearish seasonality period for Bitcoin up until the 20th of June. So kind of like following, not closely, but kind of like following the what it should be doing. So perhaps at the end of the month, if things haven't changed dramatically, we could be looking for a resumption of the uptrend, perhaps even a major alert could come from the commitment of trade report. That would be even better, or the MACD going to a very oversold level without causing too much technical damage. So in any case, it's something that we can be looking at. So with that, I will end. Free bonuses for those that manage to stay awake. Join our community. Send me an email, alex@alexspiroglu.com, and I will be very happy to see you on board while we do the founding members launch. With that, I would like to thank you for your time and your patience. Um, Smart Trade Systems, roadmap uh, to rules-based trading. This is Alex Spiroglu. Have a nice weekend.